Hello, I'm Frank Holsteen, Managing Director of Investment Management at Wespath, and I'm joined by two of my colleagues on the investment management team, Andrew Steedman, Associate in Public Equities, and John Morris, Senior Analyst on the research team. And this is your first appearance on the webinar, John, so
It is.
thank
Thanks for
you
having
for
me.
being here.
I'm excited.
We're going to spend a few minutes together to talk about artificial intelligence. I think everybody agrees that we are witnessing one of those technological revolutions that's really going to fundamentally change the way we live our daily lives. And certainly in the investment industry, we're seeing AI as a theme in almost every conversation, earnings calls and strategist calls. And so we just thought we'd take a few minutes and maybe give a little more perspective about AI. And John, maybe I'll start with you. Maybe you can help define how Wespath is thinking about AI as an opportunity, and maybe how that might be a little different than a lot of the market's thinking about it.
Yeah, thanks, Frank. The market's really taking a hold of AI. You usually have heard of names like NVIDIA, chip designer, or TSMC, a chip manufacturer. Wespath likes to take a view that is more holistic, end-to-end from the supply chain perspective. So obviously it's going to start with mineral extraction. It is going to go then to the chip designers and the chip manufacturers like NVIDIA and TSMC, which the market obviously is definitely pricing in when we look at AI. But there's also a lot of other companies out there that are getting exposure to AI and benefiting. You look at a lot of the utilities and energy companies. And then when you look at the actual end-to-end aspect, there's software and application that's built on AI that we have exposure to. And then what we're actually really excited about are the early adopters. We're seeing that in the financial services industry and healthcare industry as an example. And so those are the areas where we're taking a more holistic approach to AI and how it's impacting the end-to-end ecosystem.
Maybe a little bit more about the sectors that really have that opportunity to benefit from AI.
Yeah, the market last year really took hold for information technology as well as communication services. Very much outperformed. What we're, again, really excited about are those adopters and the early adopters. We're seeing it a lot more in financial services, in healthcare like we showed, but also utilities, infrastructure as well. So there are sectors that are outside of, the ones that won last year that we think will sort of expand and do well in 2026. We're already actually starting to see that take hold in the early weeks.
Thanks, John. And maybe one for you, Andrew, as we think about all of the opportunities in AI. What about the risks in the valuation discipline around investing?
Yeah, that's a great question, Frank. Well, AI is certainly an exciting story and has been driving equity markets over the last handful of years. It's something that we have to approach with valuation discipline and being aware of all the relevant risks. At Wespath, we're doing that in several different ways by partnering with investment managers who take a long-term perspective when investing. They're continually monitoring the companies in their universe and adjusting their views on them, but they do take this long-term perspective. Additionally, they're fundamentally driven and valuation aware whenever they're making investment decisions. I would also like to point out that the asset managers that we partner with are consistently monitoring this theme and ensuring that they're not too concentrated into this theme or the story or the AI trade. And we think that adds an additional layer of risk oversight to our funds. Lastly, on asset managers, I believe our rigorous due diligence and monitoring process ensures that these managers are sticking to their stated philosophy and process rather than chasing any AI momentum-driven trades. Mm-hmm. And I think that adds another layer of risk management. One last thing to touch on before I pass it back to you, Frank, is in terms of diversification. John mentioned that we're broadly diversified across the AI value chain rather than being concentrated in a handful of hyperscalers and software companies. And we think that is a more disciplined and rigorous approach to invest in the theme.
Thanks. Maybe back to John. Any misconceptions or or concerns around AI theme in investing?
Yeah, a few. So the misconceptions I think we're calling out a bit here is those hyperscalers that you're reading a lot about in the news. While that's one way to play the AI story or the theme, as Andrew and I and Frank have all talked about, it's more broadly diverse. And so that's one thing that we would want to be called out. But it's not just an equity story. That's another aspect to call out as well. So private infrastructure, fixed income, it's a global story. It's not just impacting U.S. equity markets, but also globally. Concerns I have are a few-fold. There's broader social and economic impact that we need to be conscious of when investing in this space. Sustainability issues that are tied to mining in certain regions. And here in the US, the energy and water consumption that we're using, when you're running a query in ChatGPT, for example, you're using a lot more energy than running a Google search. And so we want to be conscious of that because there's, important considerations when you're using these resources and the viability of it from a long-term perspective is something we're taking a hard look at.
Yeah, for sure. Maybe we'll shift gears for a second and think about how we're using AI in our work. I'll say that the Wespath technology team has been wonderful in supporting us in exploring how we can incorporate AI into our work to make ourselves better and more efficient. I know I personally, even in the most simple way, the ability to ask AI questions that you've already answered, but I don't remember where to find that research. You all produce so much research and present so much to the investment committee. I love being able to just ask AI and it finds it and presents it to me. How about you all? Maybe you can tell us a little bit about how you're taking advantage of AI in your work.
I can go first. I heard someone describe it as it's really good to help you if you don't know anything about a topic or if you know a lot about a topic. And I found that's the case in my use as well. I think it's been really helpful in finding research sources as we're looking at fund construction. And then I think additionally, in terms of manager due diligence, it's really allowed us to create some efficiencies in terms of note taking, making sure that our asset managers are staying aligned over meetings over the course of a year. And then I think summarizing and compiling information, that's been really helpful for me in my day-to-day.
Yeah, for the research team, it's really helped us compile data more efficiently, to review data more efficiently. That allows us to have a lot more, it frees up time for us to have conversations with the investment team on hard topics, on topics that AI isn't able to answer, that we're able to have to debate out and talk through. And it's able to quickly provide us the information we need to help make more insightful decisions.
And so much more to come, right?
Yeah.
Early innings.
Oh, the potential is phenomenal.
But I think the point there is that it supports us as we make decisions. I think that's something important to reiterate.
The machine isn't making the decisions.
Exactly.
It's supporting
Yes.
supporting the people.
Yes.
Thank you for that clarification. Well, one last question. I'm going to send it to you, Andrew, and I think it's the question everybody's asking. What is the investment outlook for AI over maybe the intermediate time frame, like the 3 to 5 year kind of time frame?
I think there's 3 key things to focus on as we think about how AI will drive markets over the next market cycle. The first is the rapid rates of AI adoption. It's being adopted faster than people realize and faster than any other technology revolution that we've seen before. When you look at adoption rates of AI compared to more recent revolutions like the internet and personal computers, the adoption rates are way faster. And we believe that that's going to continue in the future and drive markets. The second thing that I think is important to mention is the increased competition within the AI story. As we sit here in 2026, it's pretty unclear who the winners and losers are going to be of this trade. However, in 2025, we did see some of that increased competition with the DeepSeek shock in the first quarter, Google's most recent Gemini model in the fourth quarter, and AI names outside of the Magnificent Seven actually outperforming the Magnificent Seven. I think when we sit here in 2030 and continue this conversation, it's going to be really clear what companies won this trade and what companies lost this trade. And then the last thing that I would point to is that the large amounts of spending that's going into building out artificial intelligence infrastructure is going to continue over this market cycle. In 2025, AI companies spent almost $400 billion building out AI infrastructure, and JP Morgan predicts those hyperscalers will spend more than $530 billion in 2026 and $600 billion in 2027. So I think that the mass amount of capital that's going into AI infrastructure will continue to drive markets into the next few years. And the last point I would make as we kind of conclude this is that it's not just a US story, but this is going to impact developed and emerging markets as well. And we'll see that across our portfolios.
Those capital investment numbers are
They're
staggering,
wild.
aren't they?
Yeah.
It's an exciting time to
It
be an
is.
investor, and I'm sure we will be back speaking about
Yeah.
AI again, and we'll see how it unfolds. Thank you so much for spending a few minutes with us.